So, looks like Wall Street lost a little steam again, and you can thank geopolitics for that. Hey everyone, it's Wednesday morning, June 18th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we begin. Today's episode is brought to you by AMF Capital. For smart investment solutions and high-quality funds, head over to amf-capital.de. If you enjoy the podcast, please rate it wherever you're listening. It really helps me reach more people. On Tuesday, U.S. stocks slipped as hopes for a quick de-escalation between Israel and Iran started fading again. President Trump took things up a notch, calling for Iran's unconditional surrender and warning its leaders directly on social media. He even said the U.S. knows where Iran's leader is hiding, but, quote, "We are not going to take him out. At least not for now." Yeah, not exactly calming language. Right after that post, stocks dropped further. The Dow ended down about 300 points. That's a drop of 0.87%. The Standard & Poor's 500 fell more than 0.8%, and the Nasdaq slipped just over 0.9%. Now, the market had actually held up okay on Monday, after rumors that Iran was open to nuclear talks. But by Tuesday, new reports were circulating that the U.S. might be considering military strikes. That was enough to send investors right back into risk-off mode. Oil, of course, spiked. Brent jumped over 4% to settle above $76.50, and WTI came close to $75. Safe haven vibes were strong. Meanwhile, there's also a lot swirling around trade and interest rates. Trump used the G7 summit to chase trade deals, and the first one actually came through, a US and UK agreement that was originally agreed back in May. But other deals? Still kind of MIA. On the economic front, retail sales came in weaker than expected, down 0.9% in May, a sign that consumers may have finished their pre-tariff splurging. And now, all eyes are on the Fed. Their two-day meeting kicked off yesterday, and the big question is whether they're still planning to cut rates twice this year. With inflation cooling and markets this jumpy, they're widely expected to hold steady in their announcement today. That's it for today's Capital Markets Quickie. I'll be back tomorrow with a brand new episode. Make sure to subscribe, rate the podcast, and share it with your network. It really helps me reach more listeners. Thanks for tuning in.